Sunil Singhania, Head Equities at Reliance Mutual Fund, joins us live in our studio. Sunil, hi, afternoon. How do you feel at 5,500 for the markets? Does it seem like Indian stocks could stall from here onwards, take a breather, or is it time that investors should now consider taking profits or deploy more money?
I think first of all, it definitely feels good when the markets are up because it benefits everyone involved, whether it's the investors, us as company, and the economy as a whole. As far as taking profits out is concerned, I think that's more a trader's game. From our perspective, obviously this rally has been a very, very pleasant surprise. But having said that, we do believe that if things pan out, in terms of the macroeconomic factors which are now getting in favor, as also the steps which proactively the government has been taking, that definitely seems to be more legs, from a longer term perspective. So I think, I don't know about the trader's perspective, but from an investor's perspective, it makes sense to stay invested. And, there is no profit to be taken because I think almost everyone has missed out on this rally.
It's good to see a smile on your face, Sunil, but so do you believe that we're in the middle of a structural bull run now? Because like you say, the early signs of a rally is when people tend to dismiss it. Everyone's been talking of a correction, which has never really happened. So do you then believe that we are at an early stage of a structural bull run right now?
I think we're always in the midst of a structural bull run which started in 2003-04. What we have seen in 2008-09 and also in 2011 were roadblocks in this structural bull run. So I think our view from a longer term perspective is that, once a country enters a structural growth in terms of its economy, the growth continues for like 25, 30 years. We have seen that in China, we have seen that in Singapore, and we have seen a lot of other countries. I think in India, the actual growth started in 2003. So from our perspective, the structural bull run as far as the economy is concerned is already on for the last 8-9 years. And what we saw over the last year or so, and also in 2008-09 were probably the roadblocks to that structural bull run. So I won't say that, this is a new structural bull run in the markets which has started. Probably, we had discounted too much of negatives. The markets have run up too fast, you can say, over the last 1.5 months. But again, it's not something which you can say that either way that, it's time to book profits or time to aggressively buy. I think we have to take things as it comes. Right now, there are, clear signs of both, as I mentioned earlier, macroeconomic factors coming in our favor, as well as a lot of, impetus given by the government to again kickstart the economy, which was showing signs of slowing down.
Sunil, how much importance would you give to the recent geopolitical developments in Iran and its possible impact on crude? Because we've already seen a spike up, and thereby the impact on Indian equities.
I think obviously crude for India is very, very important because we import a lot of it. And I think almost all our trade deficit as well as our current account deficit is a cause of the huge crude imports which we have. As far as Iran is concerned, I think the things are definitely challenging. But frankly, we as probably almost like anyone else are not in a position to sort of project the oil prices. We failed miserably in the past, and we would not like to make a projection going forward. But obviously, oil prices going forward remains a key sort of a monitorable, and I think that should be definitely looked at by all the investors. Only one point here I would like to make is that the US, because of what they have done internally, is now becoming less and less reliant on Middle East for their oil imports. We read reports and we gather that probably in the next few years, US would be 80-90% self-reliant on its oil requirements, and probably that reduces the pressure on events happening in the Middle East as far as the crude price is concerned. And it is already being reflected in the difference between the two crudes, which is again become $20. So though the developments in Iran are a cause of worry in the near term, probably going forward, Middle East might become less and less relevant, though it will continue to be relevant.
I also want to put the spotlight on the power sector because for the first time in years we're seeing some serious policy intervention in a sector that's been begging for it really. The Prime Minister's office intervening, asking Coal India to sign long-term agreements with private power producers. How do you read into this move, and do you see this is just a kind of reform that the sector needed at this stage?
Yeah, I think we are very passionate about the power sector, and we are very, very positive on the power sector as far as India is concerned. This is one sector where huge investments can be made. There is no problem as far as demand is concerned because we are a power-starved nation. And if we need to grow at 8.5% for a foreseeable future, unless there is power for all, this growth is not going to be possible. So I think the developments which have happened from on the power side are very, very welcome. They have been very proactive, you can say measures. And the impact is there for everyone to see. One statement from the PMO office for the fuel security has caused stocks to appreciate 10-20%. Overall the market cap of the sector has gone up by like 20-30,000 crores over a matter of one day. And the one good thing is that this time it is not a request. It is basically a direction that you have to do it. It will force Coal India to increase its production because once you sign an FSA and there is a deadline for it to be signed, they have to make sure that they are able to provide coal. Otherwise they undergo penalty, and obviously being a listed company they cannot afford to be short on that. And the other positive thing is that these steps are only the first in the direction of many other steps which are possible. So we are already hearing an EGOM meeting on the UMPP, which is scheduled in the next few days, which will be followed by EGOM on the gas allocation policy. I think this clearly indicates that things are definitely working for the sector, and the government realizes that this is one sector where we have to, as a nation, do everything needed to ensure that the capacities which a lot of private as well as public sector companies are intending to establish, they are given all the support which is needed to ensure that these capacities come on place. Obviously, there are some other reforms which are needed, predominantly on the distribution side, because that will take care of the SEBs. But I think these steps towards fuel security will go a long way in also easing the situation as far as availability of finance, both equity and debt is concerned. So I think overall these are very, very positive steps, and this only reinforces the fact that this is one sector where the government really is very serious about ensuring the capacity addition, and from a market perspective this is one sector which no long-term investor in India can ignore.
But Sunil, which is your favorite amongst that? Would it be the private players that you're most bullish on, or do you also find value in some of the PSU power companies?
I think it's a mix of developers, both on the public sector as well as the private sector. Obviously, the private sector companies have fallen much more than the public sector, so probably the initial bounce or the initial beta can be in those companies. But even India is endowed with very, very good, stable, well-managed public sector companies in the private sector, and I think those also are worth looking. From an investor's perspective, you obviously always advise that we have a very good power sector fund, and that is the best way to invest.
Sunil, the other big concern for the sector, of course, is the financial condition of state electricity boards, and that could, in a sense, spoil the party both for the banking sector and for the power space.
Again, what you're saying is absolutely right. SEBs have been under tremendous stress. But one good thing is that they finally realized that they cannot just keep on giving power for free. State after state, so whether it's Rajasthan or Tamil Nadu or some of the other large power consumer states have already increased prices of electricity to the final consumer. And it's, I think, a myth that the consumer does not want to pay a higher price. I think the consumer is willing to pay a reasonable price as long as the availability of power is sustainable, without any blackouts. And that itself has changed the dynamics as far as a lot of SEBs are concerned. Once there are other proactive steps on the distribution side which will cut the distribution losses, we are very sure that the health of SEBs would again be quite decent. And a few of the discoms on the state side are already making very good profits, who have been able to reform themselves. Again, government has been very proactive in giving them funding, to basically modernize their distribution network. And once a few other cities also sort of privatize, I think it is going to raise the level for all the distribution companies to become more efficient. So while agreeing that SEBs are a cause of concern in the near term, but the proactive steps which a lot of these SEBs are taking will ensure that this problem will also be addressed in the near future.
Sunil, what about coal and gas shortage? Because that indeed is a bigger issue in itself. Do you think there is a need for the government to provide incentives to importers as well as private coal producers to tackle this situation? Because Coal India alone can't really help rescue it.
Yeah, fuel security is an issue, and the thing is that we are in a situation where the country has a lot of resources. So whether it's on the coal side or on the oil side, I think there are a lot of resources. I think what needs to be done is to ensure that these resources are efficiently and in a timely manner sort of exploited so that they can be used for the development of the country. So whether it's Coal India or other coal producers, I think we have probably one of the largest reserves of coal in the world. I think we just need to push, whether it is through incentives or whether it is through ensuring that the approvals are on time, to ensure that this coal comes out in a timely manner. And I think this FSA, which has been mandated by the PMO's office as far as Coal India is concerned, will ensure that the production of Coal India, which has been languishing over the last 2-3 years, actually starts to move up. And probably even the private sector companies who are sitting on huge coal reserves, if there is a timeline also enforced on them to exploit the reserves and to sort out all the pending small issues which a few of these companies are facing, probably this coal requirement at least will be taken care of. We'll definitely need to import some coal, there's no doubt about it. But the good thing is that even on that front, Indian companies have gone ahead and ensured that they have significant stakes in overseas coal companies. There are a few issues there relating to Indonesian taxes and all, which again government can play a proactive role and ensure that the resources which Indian companies own abroad can also be used for development of the power sector in India.